I'll admit it, I can be a little lazy sometimes. I'll let my Netflix show cycle through the credits between episodes because the remote is on the other side of the couch and too far to reach. Sure, it happens, but that doesn't mean I don't want to invest wisely and make my money work for me. That is why I'm a big fan of the 3-fund portfolio, also known as the lazy portfolio. It's a way of structuring your investments in a super easy way that keeps your portfolio as diversified as possible. If you don't like to spend your nights and weekends constantly rebalancing your stock portfolio, then the 3-fund portfolio is a great way to make sure you are invested in 3 major asset classes. And this is done by investing in index funds, which is a basket of stocks or bonds where you own a small piece in many hundreds or thousands of companies. But what is it? Well, the first type of fund is one that tracks the whole US stock market. There are 4,000 small, mid-sized, and large-cap corporations in the US that can be included in this fund. Second is a fund that contains around 7,600 international stocks from developed and emerging economies around the globe. Lastly, the last fund includes a mix of short, medium, and long-term bonds. There are a little more than 10,000 of these. With these 3 funds, you can hold over 21,500 stocks and bonds at the lowest cost. When you only have to buy 3 different funds, you instantly spread out your money, and amazingly, the 3-fund portfolio outperforms most retail and professional investors. Low-cost index funds are a great way to choose stocks to add to your 3-fund portfolio. Vanguard index funds are a good choice, since they have done well historically. The ticker symbol VTSAX is the Vanguard Total Stock Market Index Fund for US stocks, with an expense ratio of 0.04%. Ticker symbol VTIAX is an international stock fund from Vanguard called the Vanguard Total International Stock Index Fund. It will cost you 0.18%. For US bonds, utilize the Vanguard Total Bond Market Index Fund Admiral shares, ticker symbol VBTLX, with a 0.5% cost ratio. But before starting, you have to put at least $3,000 into each of these funds. But what if you don't have a Vanguard account or don't have the minimum investment amount for these funds? You might want to open an account with Fidelity, which is Vanguard's biggest rival. Most of the time, Fidelity's index funds are cheaper than a similar fund offered by Vanguard. But if you still don't have enough for index funds, then you may want to build a similar 3-fund portfolio using ETFs or exchange-traded funds. For US stocks, Fidelity offers the Fidelity Zero Total Market Index Fund ETF, ticker symbol FZROX, with an amazing expense ratio of 0%. For international diversification, you can go with their Fidelity Zero International Index Fund, ticker symbol FZILX, which also has 0% expense ratio. And to top it off, they also offer a bond fund called Fidelity Total Bond ETF, ticker symbol FBND. Or check out one of their brand new offerings such as Fidelity Sustainable High Yield ETF, or ticker symbol FSYD. There are actually many different ETFs that you could pick for your 3-fund portfolio, so definitely check out Fidelity's website and do your research. There are many benefits to using a 3-fund portfolio, but I'll focus on the 3 most important ones: diversification, low fees, and easy rebalancing. First on the list is diversification. Depending on what index funds monitor or own, a typical portfolio of 3 funds can hold up to 11,000 stocks. If you invest in these 3 types of funds, you won't get any repeats of the same stocks or bonds. Often, buying similar funds can cause some overlap in the stocks you own, and this makes your portfolio less diversified. Keep in mind that as risk goes up, diversity goes down. Second, it's cheap. Index funds have low expense ratios. An index fund manager gets paid 1% of assets per year. Since they're passively managed, they're the cheapest funds available. The expense ratio for most Vanguard ETFs, for example, is 0.035%. This means that for every $10,000 you invest, you pay an annual cost of $3.50. And Fidelity offers many 0% expense ratio funds as well, which is definitely worth checking out. The Financial Research Corporation studied predicting mutual fund performance to uncover strategies to predict a fund's future performance. They looked at 10 different predictors and found out that the expense ratio is a good way to predict how a fund would do in the future. If you want to choose a successful fund, you should focus on the one with the lowest expense ratio. And luckily for the 3-fund portfolio, these 3 total stock market index funds are about as cheap as it gets. The third thing is that it is easy to rebalance. Once you pick how many US stocks, US bonds, and international stocks you want, you can simply rebalance to your allocation targets. You could do a 1/3 split between them, or if you want to be more aggressive, allocate a bit more to the non-bond related funds. The best thing about a 3-fund portfolio is, it is simple. It's easy to put money into your investment account on a regular basis and split that money between 3 funds, and the 3 funds can be rebalanced annually. Investing can be complicated and confusing, which is why the 3-fund portfolio is so popular, and one of my favorite methods for keeping a well-diversified portfolio. Index funds and ETFs are amazing ways to get your start with investing and building wealth. So be sure to check out this video where I get into the details on how to get started with index fund investing right away. See you there!